9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching The China Show. I'm Yvonne with Avril.
We're counting down to the open of markets in Greater China. Our top stories: Asian stocks drop after Samsung's blowout earnings fail to satisfy investors. We'll be watching suppliers in Taiwan and other memory chip makers in Greater China. Japan's former currency chief tells Bloomberg exclusively that the yen is undervalued up to 20% as it continues to trade near 40-year lows. Also ahead, the U.S. under pressure in its do-or-die World Cup match against Belgium after President Trump's controversial intervention to overturn a star player's suspension.
And a midnight low at the Hong Kong FIC and Bond Connect Summit, where PBOC Governor Pan Gongsheng is set to speak about closer integration between mainland China and the financial hub.
All right, a lot of things that we're waiting for, right? That Pan Gongsheng, the keynote speech here in Hong Kong. Avril, certainly, as of course, with this Hong Kong Bond Connect Summit that's happening here, and certainly one thing to watch there. But I'm still looking at, right, halftime between USA versus Belgium. Belgium leading 2-1 here right now in terms of the score after this controversial decision, right? So certainly we are seeing the likes of Falarin Balogun is in that starting lineup for the U.S. here today. And yes, we'll see how this all pairs out. I think we still have two more. We're taking a look at them in terms of the score here. So certainly there's that. Let's take a look at other things, though, right? Because Samsung, those earnings here, despite those solid results, the stock keeps falling.
Yeah, this is following on, of course, from their explosive rise that we've been seeing in memory names for much of this year. And against that backdrop, we did see last week that gave way to rapid correction. So to your point about this Samsung beat on preliminary results, quarterly profits surged 19-fold, but ultimately I think earnings didn't look like they were enough to satisfy these stock traders. You're getting a negative reaction in the stock, maybe a bit of sell effect, and that's dragging on peers and suppliers that we're watching in the session as well. But I guess some of this was also priced in already given Micron's earnings, right? So for the complete picture on the memory names, we're going to be looking forward to SK Hynix's scorecard later this month. So the board take a look at how this is affecting the rest of Asia, because we did see the tech rout easing in the US, but you put things together and this is what you get. You're still down in tech, mostly in the region, although TAIEX is a bit of an outlier today, which is interesting to see. I guess also helping to cap some of these losses in the indices across the region. You're looking at the financials in Japan and South Korea. Those are doing well. Is this part of some rotation again into the defensive? And speaking of, take a look at how we are shaping up when it comes to JGBs and the yen. We are back above the 162 handle on dollar yen on a day where we are expecting a 30-year auction, which could be tricky, following on, of course, from yesterday's bond buying operation, which saw investors pretty much lining up to sell the long end. So does this make things a bit more difficult for the auction today? And does this set up a negative feedback loop as far as the yen and JGBs are concerned? We are seeing, of course, for the past couple of sessions, dollar China has been moving towards the 6.8 handle. We're watching, as you said, the bond summit today. Take a look as well on some of the other signals we're getting in terms of China futures pointing down. We're watching Tencent as well, of course, because it unveiled that new model. And it seems like these ultra low, almost rock bottom token prices, that signals maybe that they are prioritizing market share rather than margin. So that's something else that we're watching out in this session as well, Yvonne.
All right, Avril, thank you. Of course, let's take you back to those live pictures at the Hong Kong FIC and Bond Connect Summit. From what we're hearing here is the chief executive of Hong Kong, John Lee, is speaking there before the PBOC governor makes his keynote speech. And he is talking a little bit more about the sort of relationship between Hong Kong, the role that Hong Kong has here in promoting the sort of market access between the city and mainland financial markets. So what he has highlighted is the gold side of things. So Hong Kong Kong Gold Central Clearing System starts its trial today. He's also talking about they're considering development of a new renminbi gold futures contract. So that's certainly one thing. And also talking about these tax incentives for institutions when it comes to gold trading, right? We've long talked about Hong Kong really wanting to be that gold trading hub. I believe John Lee has stepped off the stage here, and we are waiting, of course, for the PBOC Governor Pan Gongsheng to make his speech. So certainly we'll see what more opening up sort of measures, what reform measures he could be highlighting here to continue that sort of relationship between Hong Kong and China as well. Of course, there's still a lot of concerns, or at least questions, about the monetary policy side of things here. The last couple of weeks, of course, we've been focusing on these new liquidity tools as well. That overnight repo rate, which to this day, we're still not sure what that rate is. Our reporting is said to be maybe a de facto rate cut, just given what we've been hearing, but we have not got that confirmation yet from the PBOC itself. Here is the governor now speaking. Let's listen in.
It is my great honor to visit Hong Kong for another time. My last visit to Hong Kong was in January 2025. After 18 months, I came to Hong Kong again with great pleasure. In the past 1 year and a half, I'm delighted to see the prosperous development of Hong Kong's financial sector. Hong Kong, as the financial hub of the world, is getting to be more competitive in the stock market. From 2025, IPO listing amount, quality and quantity are booming. The vitality of the market has been escalated. Bond market in the past year in Hong Kong dollar, RMB, euro issued in larger amounts. The sustainable bond and continuous bond issue amount made a record high. There are more diversified issuers, and the market and transaction amount are getting better. That means better liquidity. Offshore RMB market. Hong Kong has always been the hub of offshore RMB hub, and the RMB play an important role in financing, and RMB bond has always been issuing in Hong Kong. The high quality bond in RMB is always here. Wealth management in Hong Kong made Hong Kong as the largest hub of wealth management, and private banking, family office, and various kinds of the business are developing here. Financial industry is the core of Hong Kong's economy. It stabilizes the society of Hong Kong. It also serves as the foundation for the finance industry. It drives the development of the society. At this moment, we enjoy the stability and the prosperity of the society that attracts more issuers coming to Hong Kong. The stability of Hong Kong its benefits to the financial markets is in a good positive circle. This is not coming in. We cannot take it for granted. Won't be possible without the joint efforts of Hong Kong SAR government and the central government. PBOC has always been a significant supporter and participant of Hong Kong's development as the financial hub. Starting from this year, PBOC joined in the efforts in the cross-border swap connect, bond connect, and we signed the currency swap agreements with Hong Kong MA. Those concrete efforts are making Hong Kong as a better international hub. Last January, I came to Hong Kong and signed the agreements and witnesses the launches of different policies from the two sides. With our joint efforts, those policies are already in place and helping Hong Kong to develop into a better financial hub. Looking ahead for the future, Hong Kong is striving to be a better international financial hub with better prosperity and a higher vision. Hong Kong is open and prosperous in business. The infrastructure here is modern, legal system is complete, and the monitorship regulatory are international level. We have a lot of the talents gathering here, which supports the diversified, complete ecosystem for the financial industry. In addition, Hong Kong is adjacent to the mainland China. It is a strength. We are facing a lot of uncertainty. Capital of the market are diversifying the allocation of investment. They are striking the balance of efficiency and regulatory rigorousness. Hong Kong connects the overseas market with the mainland ones. Hong Kong enjoys the stability anchored by the mainland policy, also enjoys the openness endorsed by the internationalization of RMB. China as a central driver for the global economy. China's mainland economy is also a supporting foundation for Hong Kong's development. 2 weeks ago, Prime Minister Li Qiang's speech at the Summer Davos Summit that the stability of China's development is depending on 2 factors. First, the stable environment. Second, the new channels. Technology innovation is the long-term strategy for China's development. China has the huge market and the complete value chain and the high-speed development of technology and the large pool of talents. China's companies are investing a lot in R&D and helping the integration of research with industry. Our growth model shifted from the production elements to innovation and from manufacturing to high-tech development and the emerging technologies. The sustainable development of technology offers us the resilience and long-term growth. Starting from this year, again, China will focus on more high-tech development through the master plan and the midterm check and the end-term targets, and China is trying to ensure the high-quality development. For the first time, Hong Kong will have the first 5-year plan and integrate itself to the master development of the mainland China and then inject more vitality to the market. The macro policy has the stability. The monetary policy tends to be supportive. The financial policy is beneficiary to the industry development. The Chinese financial market and the internationalization of RMB are ongoing. It is an opportunity for Hong Kong as the international currency system is going to be diversified and the speed is getting faster. The demand for RMB is grow from the settlement to financing and reserve and pricing. Hong Kong as the window and the trial area for opening up to the world. Hong Kong attracts the enterprises from the overseas market to invest in the mainland market, and Hong Kong's attractiveness in this regard will only go higher. President Xi spoke at the 25th anniversary of Hong Kong's return to the motherland and stresses the Hong Kong the determination to ensure Hong Kong stability and build Hong Kong as the hub in many industries and safeguard the openness and freedom in Hong Kong, and also the enabling environment for business. PBOC will work closer to the SAR government and all the authorities to work in 4 regards and consolidate Hong Kong's strengths in finance and open up more area of development. First, connection scheme. It will help the development of the financial market. Financial market is the essential part of Hong Kong's hub role as the financial market, and a lot of the companies join in this market from the mainland in Hong Kong. We will support the high-quality enterprises to get listed in Hong Kong and explore more connection scheme on bond, interest swap, and the wealth management. And we will also integrate the financial management system of the Greater Bay Area. Southern bond size of the Bond Connect scheme will be enlarged from 5 600 billion to 800 billion, and the South bond will be included in the buyback supportive scheme, and the coverage will include the RMB and Hong Kong dollar related products. Also, Macau market will be included. Last year, I mentioned that the foreign reserve of the PBOC will have more presence in Hong Kong. In the past 1 year, the foreign reserve is active in investing in Hong Kong. In the future, the foreign reserve will have more allocation in the Hong Kong market that will give a vitality to the Hong Kong's development. Secondly, to support Hong Kong's diversified financial market. Financial market in Hong Kong has been traditionally anchored by stock, bond, gold, commodity, derivatives are sub-markets, and there are great potential to develop further. In 2017, the Bond Connect started that opened up the FIC market and opened up a new chapter. As I could recall, it was July 1st, 2017. I came to Hong Kong at that time, joined in the opening ceremony of the Northern Bond Connect scheme of the Bond Connect. I was the deputy governor of PBOC. At that time, Mr. Chen Deling was the director of Hong Kong MA. We joined together and hit the drum, bell the ring to mark the beginning. In the past 10 years, the high-quality bond insurance in Hong Kong has been growing up. A lot of the sovereignties issued the sustainable bond in Hong Kong that supports the derivative markets development and other related products. Inflation and interest rates are not stable. Chinese bond, sovereignty bond, is stable. This is the feature of Chinese bonds, and it shows the comparative strength, and it attracts the international investors. RMB financing cost is relatively low. That offers an opportunity for Hong Kong. Hong Kong should seize this opportunity and attract the international investors to come to Hong Kong and get finance here. Hong Kong will then develop as the major financing hub. In the next stage, PBOC will work closely with the demand of the market, make Hong Kong more diversified. Hong Kong will be an international hub of the asset management and wealth management. First, Hong Kong will issue the offshore RMB future. Very soon, Hong Kong will issue 5-year RMB futures. That offers a unique risk edge. Second, Hong Kong will develop a comprehensive trading platform of the foreign currencies. PBOC is working with FIC and Hong Kong MA to upload the Bond Connect to be a platform. That will be a crucial contribution to the infrastructure. It offers the infrastructure service to the foreign reserve exchanges and the bond exchanges. And the collateral products will be expanded. It is the connection. It is the development of the Hong Kong exchange contract as the collateral products. Number 4, Hong Kong's gold market will be developed further. The gold market of Hong Kong and the mainland China will be connected further. Just now, the CE announced the outline of gold market development in Hong Kong. PBOC will be actively support Hong Kong's initiative. Just in the first stage, PBOC guided the Shanghai Gold Exchange to set up the first warehouse of the transaction in Hong Kong. We will be actively developing Hong Kong in this regard and set up the clearing and settlement system of gold and get the connection in terms of the gold transaction and exchanges. And more entities will issue the RMB pressed commodities. Hong Kong Exchange will be encouraged to connect with other overseas exchanges and include RMB elements in their scheme. Number 3. Hong Kong's offshore RMB hub will be strengthened. Hong Kong as the largest RMB offshore business center, offshore market will support the liquidity building. PBOC plays an important role in RMB exchange and clearing and offer Hong Kong market with sufficient liquidity in RMB. Earlier, PBOC signed with Hong Kong MA on the long-term reserve exchange arrangement amounted 800 billion. After that, this scheme is upgraded to the amount of 200 billion. It offers the low-cost, stable source of capital for the commercial banks in China, in Hong Kong.
On this foundation, we're going to support Hong Kong MA in expanding the scale of RMB business, so it will increase from 200 billion to 500 billion. And the tenor will be within 3 years. In this way, there would be better liquidity arrangements for RMB. This afternoon, Hong Kong MA, well, as I said earlier, I mentioned a number of policy arrangements. So together with Hong Kong MA, SFC of Hong Kong, we have had long time discussions. And this afternoon, Hong Kong MA and SFC will also make some concrete explanations to the market. Last month in Zuercher, I announced the central bank work together with Hong Kong MA, and that would be the first contract signing. So Hong Kong MA can make use of RMB national bond repo so that this would facilitate liquidity management of RMB. We're going to also refine policy measures on cross-border RMB transactions so as to expedite things. Hong Kong is an important place for cross-border RMB settlements, handling over 70% of cross-border RMB settlements. So on this, together with Hong Kong MA, we have signed 3 MOUs. So I think this is a very good way of collaboration, and we promote cross-border RMB transactions so as to better support the use of RMB in Hong Kong. We're going to deepen the fast payment system and mutual access between Hong Kong and the mainland. So we will expand the scope of participants so as to enhance the usage scenarios. So in this way, we can support the Hong Kong RMB immediate or instant payment and settlement systems. And in this way, Hong Kong can have a more in-depth RMB capital pool. At present, there are many types of RMB products that can be invested, including equities, bonds, repo, derivatives, and so on. We're going to continue to issue central bank notes, and we will also support the Ministry of Finance of China to expand the scale of national bond issuance. In this way, we can enhance the scope of the market and ecosystem of Hong Kong. Financial security is a very important foundation for prosperity and further development of Hong Kong over the past years with our motherland's support. Well, Hong Kong has already overcome the difficulties during the Asian financial crisis in the 90s, as well as the international or global financial crisis in 2008. In 1998, under the Asian financial crisis, Mr. Zhu Rongji, the then Premier of China, said very firmly that the central government will strongly defend the stability and prosperity of Hong Kong. Now, financial strength of China is already much bigger, and our foreign reserve is #1 in the world. So we are able to help Hong Kong deepen financial transformation, and we will offer more comprehensive support and safeguard for financial security in Hong Kong. With one country, two systems, and also with the concerted effort of Hong Kong and the mainland, I'm sure that the development of Hong Kong as an IFC will see brighter prospects. And we welcome more investments into Hong Kong and into the RMB market so that we can share the benefits and fruits of development in Hong Kong. I wish this summit all success. Thank you. Thank you, Mr. Pan, for the excellent speech. Thank you. Please return to your seat.
Monumental highlight of today's summit. Today, we are proud to witness a historic milestone for Hong Kong's gold market, the official ceremony for trial operation of Hong Kong's gold central clearing system and Shanghai-Hong Kong gold market cooperation.
And that was the PBOC Governor Pan Gongsheng there speaking the last 20 minutes or so about really giving its stamp of approval when it comes to Hong Kong's role as an international financial hub. Did talk a little bit more about how to deepen that relationship between Hong Kong and mainland here, in particular when it came to developing this offshore renminbi hub in Hong Kong. Also talking about the potential of this gold trading hub in Hong Kong as well. They did talk about when it comes to that Bond Connect, in terms of that southbound Bond Connect, some of the quotas has been raised. So certainly there has been some news here. But certainly it's interesting too, Avril, about it seems like further deepening of this relationship between Hong Kong and Beijing.
Yeah, on top of the role as a gold trading hub and the role in perhaps facilitating internationalization of the renminbi, he also talked about perhaps encouraging good companies to list in Hong Kong. So maybe, a support in terms of IPOs and listings in the city-state. Let's take a look at what our correspondent Min Lo as well has been tracking, watching this very closely for us at the Hong Kong FIC and Bond Connect Summit. So Min, first off, talk to us about the initial reaction. There were a couple of things that we had sort of already expected coming into this. What else are we learning?
Yes, Avril, I think what I'm taking away is that the theme of RMB internationalization has been a major one throughout PBOC Governor Pan Gongsheng's speech, right? He announced a slew of measures to that end, including encouraging supporting the finance ministry to issue more offshore yuan and sovereign bonds. He also talked about supporting Hong Kong to issue offshore bonds, 5-year tenor bonds very soon. And this will provide international investors with another hedging tool when it comes to government bond risk and potentially encourage more participation in the Chinese sovereign bond market, because the PBOC governor did say that one of the advantages is the stability of China's bonds and how that provides a diversification play here. And of course, increasing the quota for the offshore bond connect from 500 billion yuan to 800 billion yuan. There is also an RMB lending facility. The quota has been increased as well, I believe, to 500 billion yuan. And he talked about how this increases the attractiveness as Hong Kong as a hub by providing very cheap liquidity in RMB to international companies. It would attract more companies to set up headquarters in Hong Kong. He's also encouraging more Chinese good quality companies to list in Hong Kong as well. So a lot of measures to enhance the connectivity between mainland China and Hong Kong, whether it's in the Bond Connect, the Swap Connect, or the Wealth Management Connect here.
Yeah, it's interesting, right? In terms of creating this offshore renminbi hub, we know Hong Kong plays a big role, but does this further widen the gaps that we see with Shanghai, for example, or even Singapore?
That's right. And at the same time, I think it's sort of trying to use Hong Kong as that offshore hub to complement what the government is doing in Shanghai as well, capitalizing on Hong Kong's role as an international financial hub and using Hong Kong as a hub to really connect with other governments in the region when it comes to trade financing, right? Because he touted this deal whether an MOU has been signed between the HKMA, the PBOC and Bank Indonesia to enhance the usage of yuan when it comes to bilateral trade financing. This is potentially something that could maybe grow and expand and to other countries in the region as well. And yes, there is this competition with Singapore as well, especially when it comes to this new gold clearing system that is being launched in Hong Kong. Singapore also has a similar ambition to launch that before the end of the year. But I think one of the major advantages that Hong Kong has is that of the 11 banks that are now on the board of the Hong Kong clearing system, 5 of those banks are mainland Chinese banks, including the PBOC, ICBC, agricultural banks. So it truly is able to serve as that bridge between China and the world, right? Allowing Chinese investors to access international capital and international investors to access opportunities in mainland China. And of course, Hong Kong really wants to become this true alternative hub to London and eventually have the power in influencing pricing when it comes to gold instead of taking prices from London and New York. And the PBOC governor also mentioned that this is just a start, that the government will encourage the launch of more commodities trading that are priced in RMB. And again, this goes to further President Xi's plan to make the RMB a powerful international currency and reserve currency as well.
Min, thank you so much. Our China correspondent Min Lo live at the Bond Summit for us, talking us through what the PBOC governor has just outlined. Now let's take a look at how the rest of the region is faring. Of course, the big one was the Samsung preliminary results for the second quarter, and it knocked things out of the park in terms of a 19-fold surge in profit. But that wasn't enough for investors. You look at the Kospi, that's down almost 6% at the moment. No surprises, the drags coming from Samsung and the other memory names. But perhaps helping to offset some of these declines is what we're seeing among the Japanese and the Korean financial names. Maybe investors are looking more towards the laggards at the moment. Yvonne?
Yeah, is valuation becoming a concern when it comes to some of the hardware side of things here? That's certainly a question for China as well, right? Our Taking Stock today did talk about maybe it is time to maybe tilt towards some of these unloved sort of sectors like healthcare, for example, even some consumption names as well. But yes, that sell the rumor, buy the rumor, sell the fact for Samsung, that certainly is playing out. And that seems to be filtering through here when it comes to some of these domestic chip names here today. Capricorn Tech is lower by 1.5% onshore, and we are seeing the CSI 300. The Chinex also seeing moderate declines, though, relatively speaking, when you look at the rest of North Asia, right? Korea certainly is one thing, but there's still dispersion, right? Taiwan is still doing and holding pretty steady here right now. There is a little bit of movement when it comes to some of these consumption names. Huichao, Midea are lower here this morning, but not that much in terms of conviction here. It'll be interesting to see what we hear from CGBs and the like. I mean, just given what we heard from PBOC Governor Gongsheng about how monetary policy will remain supportive, right? That was one line that came through from that keynote speech at the Hong Kong Bond Connect Summit as well. Let's hit the boards and see how Hong Kong is doing, because certainly there has been some moves here when it comes to Kuaishou, for example. There you go. We're lower by about 6.5% here after Tencent cut its stake in the company to around 9% or so here. Citi and some of the sell-side analysts there are saying it is a bit strange why they're cutting that stake. So still some question marks around there. But the rest of the HS Tech space looks pretty good. So we're up 3% for Tencent, Baidu, Meituan, Baba are all doing pretty well. And HS Tech is really lifting the benchmark here. Hang Seng is just slightly higher by about 1/3 of 1%. So once again, it is H over A. Let's take a look at some of the memory-related stocks here. Obviously, the Samsung news here, given the fact that it was a 19-fold surge in terms of their forecast when it comes to second quarter operating profit. Still not enough to satisfy all those equity traders out there. So there is that sort of effect that you're seeing across some of the Chinese chip makers here today. And then, is it all in the price, right? That's the key question. We're also watching the likes of Luxshare. So there has been some news around, obviously, its plans to have a Hong Kong listing. So they plan pricing Hong Kong listing at the top of its range here, according to our sources. The stock not moving too much here this morning. And we do have more debuts to tell you about, right? This is the next batch in the 15 listings in Hong Kong today. We're talking about, let's talk about some Chinese medicine, right? Beijing Tongren and then also a healthcare there. There you go. First day of school not doing too well. We're lower by about 17%. Let's bring in Michael Liang, Chief Investment Officer at Foundation Asset Management Hong Kong. I want to talk about tech because you've been kind of talking about this inflection point in AI, and you're giving it 3 to 6 months. Walk us through the timing here.
Right. I think the second quarter results going to come out late July. That's one of the real test. But having said that, I think if you look at the Samsung results, the great results. But look at the net margins. Hynix and Micron alike. Their gross net margins over 60%. If you look at LV or even Apple, their net margins around 20. This is 3 times of a consumer name. It's just not normal. That will create a lot of imbalances within the AI ecosystem. AI probably is the way of the future, but we need to look at how much it costs when you run that AI business or using the AI model. When you have increasing capex from hyperscalers, most of the incremental expenditure going to the costs rather than the compute capacity. That's alarm bell to me. So 60%, north of 60% net margin is just not sustainable and healthy.
We saw Apple raising prices of some of their products already, right? So you're basically saying demand destruction will happen pretty soon.
It's already happening, but
yeah.
It's going to be very visible in the next 3 to 6 months.
Okay. Does that mean rotation then? How are you looking at the rest of the second half now?
I would love to be very bullish on it, but I think it's at the best you see some rotation, like you said, but overall market trend probably going to be just a yo-yo, bit of volatility up and down. But, the market is not really trading at 2026 PE anymore. They're looking at 2027 and beyond. When you look at that far out, it's very difficult to be certain, right? Given what, things are changing very fast. So on that very bullish view, 2027, 2028 earnings, PE, probably okay. But there's a high degree of certainty associated with that forecast. So I think market will continue to make that adjustment looking to the future. That's why there's going to be volatility with us.
Yeah, Michael, can you talk a bit more about that to the future, right? Because some of these memory names, their capex plans, as we've seen in South Korea, they're 2, 3, 4 years from now. How do you think that's going to shake up as maybe there are a bit more concerns in the ensuing years about excess capacity or inventory? How exactly might that play out in markets?
Well, if there's additional supply in the next 2, 3 years, it'll be great. But I think market looking for a lot shorter time frame than that, because in the meantime, that's the bottleneck. What's going to solve that problem? I have no crystal ball on it, but I think that generally, in the meantime, this increasing capex for memory chips and so on is not going to solve what the problem we're facing today.
Talk to us as well about what looks good on the AI chain if we are looking a bit more near term before we see the wobbles. What else on the AI chain looks attractive?
We are value investors. I tend to look at valuations a lot more than forecasts of earnings because it's highly uncertain sometimes. If you look at in terms of PBs, right? I think memory business is a cyclical business, although everybody's saying today is not. I seriously doubt that's the case. In terms of PE, memory stocks are very cheap. But in terms of PB, they're very expensive. They're like 4 standard deviation above historical, even higher. On the contrary, you have a company like Tencent, it's trading at 12 times earnings. That cash flow to me is very much, I can't say certain, but with a higher degree of certainty. With 12 times earnings, I find value in that kind of business rather than paying something way into the future. You see some correction in the Asia tech stocks today because they are kind of all beta play. Nowadays, you've seen a 10% moving up and down in a day seems to be normal. That cannot be normal. As we know, I've been doing this for 30 years. That's just not normal. So I feel there's this, they have a reckoning upon us.
You said software in the U.S. looks cheap right now. Before this, there was all this kind of concerns about disruption, right? That AI was going to take over some of these software companies and eventually displace them. Are you not thinking that as well? Is that a concern at all for you?
Not anymore. At the beginning, yes, we have no idea how AI is going to work out. But now we try to implement AI into our own workflow in our company. you need a specialist. I mean, AI actually, in my opinion, is a great tool, actually creating jobs. So for software companies to totally give up their business model, everyone else gonna embrace AI, you need someone expert, specialist in between. I think software do have a role to play in that whole ecosystem. And for example, like a CRM, right, Salesforce, right, trading at 10 times earnings.
Yeah.
I think if they make a proper transition using AI tools for their software business and used by the customers, the corporations, I think it will be great business.
Michael, just bring it back to China tech as well. I mean, when we look at the ecosystem, even with Tencent and its token pricing, you do get the sense that they are prioritizing market share more than profits. What are you seeing out there in the space that, maybe because of valuations, it looks right as a time to dip in?
Growing revenue top line, it is very important because overall, the Chinese economy is not growing as fast as before. So as a growth company, they have to, grow the revenue, probably the first and foremost. But Tencent as a company still take care of the bottom line far better than some other companies, which I'm not going to name names here. So yes, there's a balance to strike here. I think Tencent in that context is probably better than many others.
Michael, it's great to chat. Thank you so much for your insights. Michael Liang, Chief Investment Officer at Foundation Asset Management. And we get more analysis later on in the show. UBS Chief Investment Office tells us why they think AI remains a powerful driver of structural growth and the opportunities they're seeing beyond chips in the wider AI ecosystem. Much more ahead on The China Show. This is Bloomberg. Let's take a look at what's happening in FX as well in the region. The dollar has been moving sideways more or less past couple of sessions. Today, though, you are seeing the yen right near the 162 handle, and this is coming against the backdrop of data which show that speculative shorts on the yen are running at the highest since the year 2007. You look at the fundamentals, it's the yield gap, it's also the fiscal pressures out of Japan. A former top Japanese currency official says the yen should be as much as 20% stronger than it is, though, at around 130 to the dollar. That's even as the currency hovers at around 40-year lows. In an exclusive interview, we also asked Tatsuo Yamasaki about a possible floor for the yen.
I don't know, but I think the current yen exchange rate is substantially undervalued. And I think the deviation from the range, which reflecting economic fundamentals, I think more than higher than maybe more than 10% or 20%.
Oh, wow. Why don't investors and traders feel that way, that the yen is undervalued? Is this all about speculative positioning? Why are we continuing to see this pressure?
Yeah, I think that the primary driver is speculative trade. And such speculators until recently argued that soaring crude oil future price is a main factor to depreciate the yen. But now it's falling down.
Right.
So that's now they are seeking for another three reasons. So first is interest rate gaps between United States and Japan is widening again. And the second, Takaichi administration is probably opposing the further policy rate hikes. And the third, Takaichi administration is now shifting towards more expansionary fiscal policy.
Are those statements true? I mean, is what the markets believe actually something that's happening on the ground, in your opinion?
I think that all of these three scenarios or views are mistaken. Because As for the interest rate differentials, yes, BOJ's next move is definitely rate hike, maybe followed by several rate hikes. While FRB next move is still uncertain whether it is rate hike or rate cut. Even if it is rate hike, I think it is very likely just one-time event.
Despite fundamentals, markets and really market moves are about psychology, right? So if we continue to have this belief in the markets that the yen will continue to weaken from here, does any sort of FX intervention by Japanese authorities help?
The objective of the intervention is that to make the market convinced that the current direction is wrong. Current direction is further deviating from the economic fundamentals. Yeah.
And it's not about a level, because last time we had more than $70 billion or so used by Japanese authorities. We didn't see the Japanese yen break 155. That was a very difficult line in the sand, it seemed, where we wouldn't strengthen further. So how much is it about the pace of the movement of the Japanese yen, not necessarily about a threshold?
That is a very difficult question. But compared to the previous intervention, like in the year of 2024, when that Japan-US interest rate gap has started to narrow, but still yen continued to weaken. So the intervention was very effective. But now people are not yet convinced that the economic fundamentals is different from the current levels. So that's why, to make people believe that the economic fundamentals of the Takaichi administration's policy is more, how it's called, proving the stronger yen.
Will Japan need the help again from the United States in the form of Fed rate checks? And would that help?
I think that never before have the U.S. authorities so well understood and so well accepted Japanese current intervention activities. So they are always ready to support us. But of course, it is different from if they make intervention by their own account. Because for them, to make intervention means they devalue their own currencies, which is they have been criticized to other countries like China. So it's very difficult.
But even if they were to support Japan, for how long, especially since Japanese authorities also potentially need to sell more treasuries, right? Which would actually push up U.S. yields, which the U.S. probably doesn't want to see.
But you know that the current level of the Japanese foreign reserves is more than $1.3 trillion, which is 200 trillion yen. That is more than enough to without impacting the U.S. Treasury bond market. Japanese authorities can freely make intervention.
Yes, I asked for a review by FIFA. I spoke to a man who's highly respected, and by the way, whose level of respect has gone up tenfold. And he was good before this started, but you know, he really pushed it in this country. I'm the one that got them to do it.
All right, that was the confirmation from President Trump overnight here that how he did make that call to the FIFA president to try to reverse that suspension of Balogun. And certainly it's been continuing to spark a lot of backlash here all around the world. It's interesting, though, I'm tracking that we're 87 minutes into the match. 3-1, Belgium is still leading here. So anything can still happen in the next few minutes or so. But certainly it does raise the stakes here. I'm really, this whole game has been overshadowed now. We're not even talking about tactics now. It seems to be all about politics, Avril.
Yeah, I mean, you think about it, I think for the FIFA people, right, they were thinking about bringing football, reigniting it with this World Cup being hosted in the U.S. The U.S., as you know, a bit of an untapped market, but you do wonder with this politics being brought into the equation, the extent in which some of that progress has been derailed because it has turned into a really controversial issue. We have even the likes, not just Infantino that's been weighing in, right? Sepp Blatter, of all people, who in his time also faced a fair bit of controversy. He's been saying that red cards are not overturned by political phone call. So suddenly here, a very controversial issue that we've been seeing, and of course watching how the next couple of minutes go on, 3-1. But as you say, things could change still, Yvonne.
Yeah, it certainly is very interesting, especially for the likes of Belgium, right? This is sort of this new generation that they have of players here. They haven't been able to really win a World Cup trophy just yet. So, certainly that's one thing to watch. They came in third place back in 2018 in that World Cup in Russia. So the Belgium, government have been sounding out on this as well. So that was the commentary from Sepp Blatter, which was quite telling as well. We've also heard from FIFA that came out Monday afternoon with this 900-word statement basically trying to defend its decision to reverse Balogun's suspension, and really what the likes of UEFA, right? They also mentioned here that reviewing, this is the FIFA's statement here, reviewing the legal consequences of red cards in football is nothing new in the modern game. UEFA also commented overnight and also saying that potentially here that FIFA did cross the line, right? They said the decision to suspend for a probational period of a year, the implementation of one match automatic suspension following the red card issued to the player, crossed a red line. So certainly that is going to be one thing that we're going to be talking about even after this match ends, no matter who wins. I feel, as you mentioned, FIFA has been looking into U.S. as a key sort of growth market here. Soccer or football there hasn't completely been as successful as the NFL, for example. So certainly that is a lot of implications on what this means, right? FIFA, the relationship, of course, with politicians, and of course, the future of really football in the United States. I love this call, though. I believe it was Morgan Stanley. The sell side is talking about beer, right? The fact that you have Mexico, the fact that you have Brazil, that are no longer entering into the quarterfinals, certainly does dash hopes of maybe some sort of beer boom, they say. And you actually did see the likes of these beer stocks fall in Europe. I think Heineken was down. We're seeing some of these beer stocks in Asia also falling today too, Avril.
Yeah, and then I guess we also have to settle the debate. Are we going to call it soccer or football? Anyway, this is what you're seeing in terms of beer stocks. We're tracking some of the other things as well, following on from those Samsung earnings, including China memory stocks. We'll take you through that at the top of the next hour. This is Bloomberg.
Financial market is the essential part of Hong Kong's hub role as the financial market, and a lot of the companies joining this market from the mainland in Hong Kong. We will support the high-quality enterprises to get listed in Hong Kong and explore the more connection scheme on bond, interest swap, and the wealth management. And we will also integrate the financial management system of the Greater Bay Area. Source and bond size of the Bond Connect scheme will be enlarged from 500 billion to 800 billion, and the South Bond will be included in the buyback supportive scheme.
All right. That just happened a few minutes ago. Gongsheng there, the PBOC governor, speaking at the Hong Kong FIC and Bond Connect Summit, really talking about the possibilities here of really deepening this integration, or at least this Connect scheme when it comes to bonds and southbound flows, and quotas have been raised, they say, and really further integration and opening up when it comes to an offshore renminbi hub. That certainly was some of the key takeaways from that Gongsheng keynote speech. But I want to talk about football. I'm going to put my football cap now and try to do this, right? So the game's over. Belgium has defeated USA 4-1 at the FIFA World Cup. That match that just wrapped up a few seconds ago in Seattle. Romelu Lukaku was the one that made that last sort of score there. And really, he was the favorite to serve and score during this game. So certainly, despite the U.S.'s efforts and what President Trump making that call to the FIFA president to reverse the suspension of Balogun, the Belgium, they continue to deliver here.
Yep. So we're seeing the U.S.'s hopes of entering the quarterfinals for the first time in more than 20 years. That's been dashed. Take a look at what we're seeing in the region in terms of, aside from what's happening in the World Cup. Another scorecard, of course, from Samsung, right? The preliminary results, they knock things out of the park. We can unpack that a bit further, but this is the results in the market reaction. You're looking at the Kospi. Things have been really choppy, but ultimately I think that negative reaction speaks to a bit of sell the fact. Japan also down day. The TAIEX is keeping its head above water. Let's take a look at how Samsung is doing in the session. And this is, of course, coming as that report came that it was a 19-fold jump in operating profit, right? And this is, showing how it has the pricing and the demand power, but the concerns of how much further, I guess, does this go? Because this maybe wasn't so much of a surprise following on from what Micron already illustrated on memory demand. We're, of course, watching out next for SK Hynix's scorecard that comes in later this month. Let's take a look at how some of the other memory players and Samsung suppliers are faring today. There you go, Kioxia, the other big memory name in the region, down today. Suppliers are also on the back foot, Yvonne.
Yeah, it wasn't all in the price, I guess, as you say, right? As soon as we got those Micron earnings, we knew that Samsung would be doing well. So maybe this is sort of consolidation when it comes to the chip space here this morning. We're watching some of these Samsung suppliers. It's pretty mixed bag here. You still see MediaTek do okay in Taipei. We're up about 1% or so, but Global Wafers is down some 5%. Let's bring in Anthony Stevens, our markets reporter, who's been tracking this large rotation out of tech after those Samsung results. What do you think is going on?
You think about how you manage risk, right? If you have a very extended positioning in something that turns very volatile, you have to reduce that position size, just mathematically, right? And that is what you're seeing in this kind of memory trade. It's turned very volatile for the world's largest AI trade between Micron, Hynix, and Samsung. You have these leveraged instruments churning the market around. And as volatility goes up, the level of beat that you need to continue pushing this bullish narrative keeps going higher. And you saw that in Micron, and now you're seeing that in Samsung. People keep reducing the size of their positions as the expectations keep growing. So now that vast wall of money leaving the memory trade is finding new homes. And that rotation is coming into non-tech in the form of Japan banks, Korean banks, and some tech. So you see Taiwan doing quite well, and that's because Taiwan has a much wider base of this AI narrative. They have custom chips, they have AI racks, they have printed circuit boards, and all those names are picking up the slack from the memory space.
With this money perhaps finding a new home, where does this leave China? How is China shaping up thus far?
So one of the new interesting places money is finding a new home is Tencent, right? This darling of the past has started to integrate AI into its kind of super app ecosystem, and there's more headlines, today that HY3 will have workflow integration into its existing suite of software. What's really interesting about this model is how cheap it is. It's 1 yuan per million tokens. When you compare that to Claude or OpenAI at like $3 to $4 for top of the line, you can see the huge pricing disparity. Thus far, the market is celebrating Tencent's return to the AI game. Tencent has been quite strong recently and is going again today, holding up the HS tech. So that's one angle on China. The other angle is the laggard buying. You've seen HS Bio trade really well as the pharmaceutical sector attracts some growth money away from tech. So there's a more churn within the Chinese market as opposed to a clear direction or clear beta to the market. People have to do the hard work of paying attention to what part of the AI trade is working and not. In China, the AI hardware trade has gotten a lot harder after the Samsung result, and this points to the increased volatility in the Chinex in the last few days.
Anthony, Great to get you talking on these market insights. Thank you, Bloomberg Markets reporter Anthony Stevens. Now, with Samsung, just to recap, of course, as we've been highlighting, the surge in profit was 19-fold, but that still failed to impress investors. Our Seoul Bureau editor, Denny Thomas, joins us now. So, Denny, we've just been talking through the market reaction and perhaps investors looking for other bright spots, but walk us through your big takeaways from the Samsung earnings and where we go from here.
Yeah, from all perspectives, this is a kind of a blowout results. From a year ago, it's about a 19-fold increase, and if you just take the quarter, it's about 50% more operating income they have produced. So there is clearly demand out there, but as you say, the stock has run up, and there are people pretty nervous about what the future brings. So we will see more about what the demand looks like when Samsung comes out with the full and final numbers, and they will have more discussions. Also, don't forget, they have also taken a provision for the bonus, which has been a big impact, which is going to have a big impact, as you know, after the May, the bonus agreement they signed. So they've taken a big provision for that as well. So, overall, it's a big number, but the run-up in the shares have been pretty strong. So it's going to, people are digesting and seeing, where to look for opportunities in this market.
Yeah, it's continue to see more dispersion. I guess that's still the word to use compared to the likes of Taiwan and Korea, right? And it seems like Korea is now looking a little bit less favorable than the likes of Taipei and that market there. What are people on the ground telling you about what's next in this chip rally?
Look, I think the SK Hynix ADR is going to show you a new strength, right? If you see, they have closing the book earlier. A day earlier, the book is fully full. They already got big demand. They got a big hedge fund which is committed $7 billion. So from an investors trying to play this trade, there is some way to go. So there is that split. Do you want to invest more in Hynix for now and take a bit of a profit from Samsung? There's a lot of things at play, but this demand that ADR is generating is a clear sign that investors not given up hope in this trade. It's just that 128 billion is sucked out of the market. You would see a bit of a pressure coming into the peers like Samsung and others. So probably part of the today's reaction will also have to reflect the fact that your rival is bringing in big load of money from a US listing.
And I suppose the investors into SK Hynix might not necessarily be the ones that affect the valuations as well when it comes to the memory makers. But talk to us, this is all coming at the time where, for the likes of Samsung, they're also under pressure to sort of spread the gains from the AI boom. What's the latest on that front? What are you hearing in South Korea?
Yeah, so the government has made very clear that they don't want to see this boom that is coming once in a generation, once in a lifetime boom that's coming to kind of go waste. They are looking at various ways to capture that. They're thinking of various investment funds and wealth funds and sovereign wealth fund kind of entities to put in place so that these profits that is coming in can be deployed over a longer period of time. And there's a lot of discussion around, and you saw a big investor number thrown last week. There's a lot of follow-up activity that the companies are announcing. So there is a long-term plan that the government and the companies are working on to make sure that they don't lose this opportunity that has come their way.
Denny, thank you so much. Bloomberg's Denny Thomas joining us out of Seoul with a breakdown of those Samsung earnings. Meantime, SK Hynix has, of course, begun this marketing process for its U.S. listing, and it's seeking to sell nearly 18 million American depository receipts. The memory chip maker is looking to capitalize on strong investor demand after its Korean listed shares surged about 260% this year, pushing its market cap above $1 trillion. The ADRs are expected to begin trading on the NASDAQ on Friday, Yvonne.
Yep, certainly that's the next thing to watch, as Denny told us there, when it comes to Korea. Still ahead, Australia slams China's test of a nuclear-capable missile in the Pacific, describing it as destabilizing. We have an update on the latest regional flashpoint coming up. This is Bloomberg.
Hong Kong's gold market will be developed further. The gold market of Hong Kong and the mainland China will be connected further. Just now, the CE announced the outline of gold market development in Hong Kong. PBOC will be actively support Hong Kong's initiative.
PBOC Governor Pan Gongsheng, they're speaking at the Hong Kong FIC and Bond Connect Summit. Let's bring in our China correspondent, Min Lo. She's still on the ground there at the event. I'm really talking about this sort of gold trading hub that Hong Kong wants to become. Tell us a bit more about what we learned today.
Yeah, an important milestone that has been reached as Hong Kong has started this trial of the gold clearing system a few months ahead of Singapore, which is also looking to launch its own gold clearing system before the end of the year. So really capitalizing on this first mover advantage here. Both cities hoping to be that bridge between East and West to capture the Asian trading hours, and especially being home to two of the largest pool of consumers and investors of gold in India and China. So Hong Kong and Singapore are well positioned to capture that. But the advantage for Hong Kong is that it has gotten 5 of these Chinese banks on the board of the Hong Kong Clearing Company. So it will be able to be that bridge between China and the rest of the world, offering Chinese investors access to international liquidity and international investors access to onshore opportunities. And it also dovetails with the Chinese government's plan to attract more central governments to buy and store gold in mainland China. So China wants to offer this custodian service, which Singapore is also looking to start offering as well. And by having this clearing system in Hong Kong, it allows investors a way to exit either into the Shanghai Gold Exchange or to the London bullion market. So again, really supporting mainland China's gold, and of course furthering this plan to internationalize the RMB, because you will be able to transact and settle those gold trading in RMB and Hong Kong dollars. And we know the Hong Kong government is looking to offer tax concessions to eligible institutions for settling their gold trades in Hong Kong as well. And this is coming as the Hong Kong government is also considering creating a gold futures exchange in RMB. This is under consideration, and if so, it will be the 4th attempt to launch a gold futures exchange after 3 previous attempts have failed because of lack of liquidity.
Yeah, and we're watching some of these live pictures coming through inside that ballroom there right now with the likes of HSBC CEO Zuercher talking about they will expand gold storage in Hong Kong. So that's according to HSBC. As we know, they're among the banks in that gold clearing company board. So they're talking about the future of this as well. Of course, he is joined by the likes of Bill Winters from Stanchart there on stage. You mentioned a little bit more about some of the things that were announced, whether it was Hong Kong being that offshore renminbi hub, also when it comes to some of the southbound bond connects, or the quotas have been raised. What stood out to you?
Yeah, I think what stood out to me really is this whole theme about expanding the use of the offshore yuan. That has been a key theme in PBOC Governor Pan Gongsheng's speech earlier. There has been a series of measures, right? Whether you're talking about expanding the quota for the southbound bond connect from 500 billion yuan to 800 billion yuan, and increasing the usage of these bonds as collaterals for yuan financing. The Governor Pan also said that he will support the finance ministry to issue more offshore bonds and offshore yuan and sovereign bonds in Hong Kong. They're also going to support Hong Kong to issue bond futures as well, 5-year tenor. And this is something that will provide another tool for international investors to hedge against sovereign bond risk. And given that Chinese bonds have been extremely stable, Governor Pan also mentioned that is a good diversity play, right? And there's another measure. They also increased the RMB business financing facility in Hong Kong to 500 billion yuan. This provides cheap liquidity to companies that want to borrow in yuan, and again, encouraging foreign companies in Hong Kong to use more yuan in their transactions. So one of the MOUs that will be signed today will be between a Hong Kong exchange and the PBOC on interbank cross-border RMB payment, and the PBOC will also support Hong Kong in extending the use of RMB in trade financing. And one of the MOUs that had recently already been signed is between HKMA the PBOC and Bank Indonesia to try to promote the use of trade settlement, use of Yuan in trade settlement, and this is potentially something that could expand to other countries in Southeast Asia as well.
All right, Min, thank you. Our China correspondent Min Lo there joining us live from that Bond Connect Summit. That panel just wrapping up here between the likes of HSBC and Stanchart when it came to, of course, those FIC opportunities for Hong Kong. Well, plenty more to come. This is Bloomberg. President Trump says Russia's war on Ukraine is closer to ending after he spoke by phone on Saturday with Vladimir Putin. Now, Trump is also expected to meet Ukrainian President Volodymyr Zelensky at this week's NATO summit in Turkey.
President Putin wants it to end. I will tell you that very strongly. A good call. And President Zelensky actually wants it to end now. And we're going to be going to NATO and we're going to be talking about it. And I think we're going to get it. I think we're going to get it ended. It's been a terrible situation.
Well, the NATO chief, Mark Rutte, has cautioned that the alliance doesn't have an endless supply of missile interceptors here after Zelensky requested for more to repel Russia's airstrikes. Bloomberg's Oliver Crook has more from Ankara.
The leaders of the 32 nations that compose NATO will assemble here in Ankara, Turkey for their annual meeting following on that historic meeting a year ago in which all of these nations committed to spend 5% of their GDP on military and defense spending. In that year, of course, the war in Iran has dominated the conversation, has created a real fraught relationship between President Trump and a number of the European leaders that he will be meeting over the next couple of days, primarily with the Chancellor of Germany, Friedrich Merz, who said Trump was being humiliated in Iran, and of course an escalating dispute between President Trump and the Prime Minister of Italy. For the Europeans, the goal here is very simple. It is to not upset the President of the United States, to not rock the boat, and to advertise on some of the accomplishments they've made over the last 12 months in terms of that defense spending. Secretary General Mark Rutte speaking on Monday saying that they're going to get some very serious concrete plans in terms of spending tens of billions of dollars of commitments. For President Zelensky, who will also be attending the sidelines of the meeting and meeting with President Donald Trump, it's a chance for him to build on some of the diplomatic efforts he started at the G7 meeting a couple of weeks ago to try to bring President Trump back into the negotiations with Russia and back in on the Ukrainian side. And finally, for President Erdogan, who is the host of the meeting, it is an opportunity for Turkey to display its military might and, of course, its diplomatic chops. It's played crucial roles in negotiations and discussions between Russia and Ukraine, with Iran, and a number of the other conflicts within the Middle East, to say nothing of the personal relationship between President Erdogan and the President of the United States. Donald Trump said had this meeting not been held in Turkey, he may not have attended at all.
Now, meanwhile, Australia has called China's firing of a long-range missile into the Pacific Ocean, quote, destabilizing for the region as it steps up its criticism of Monday's test. The U.S. has also called Beijing's rapid development of nuclear-capable weapons a great concern to the world. Let's bring in our chief North Asia correspondent, Yvonne, on the latest about this.
Yeah, so it has been destabilizing to a number of parties. Obviously, the United States has great interest in that part of the Pacific. Of course, this trajectory of the missile, it flew over the exclusive economic zones of the Federated States of Micronesia, Nauru, and Kiribati, and landed about 1,000 kilometers northeast of the Solomon Islands, which, by the way, Prime Minister Albanese of Australia is there right now. We'll talk about that in just a second. But again, there's great interest by the United States, the State Department saying it monitored the flight while also criticizing the move by Beijing as a rapid and opaque nuclear weapons buildup is of great concern to the region and to the world. And of course, that trajectory flew to the south of the military buildup of the United States in Guam, as well as the Commonwealth of the Northern Marianas Islands, that's Saipan, which is a Commonwealth of the United States. So again, I think it's interesting timing. And it's also a demonstration as well of Beijing's military capabilities. This ICBM, which had a dummy warhead in the top of the missile. Xinhua news agency saying it was a routine arrangement that was not directed against any specific country or target. but we're hearing criticisms from Penny Wong, the Foreign Minister of Australia, as well as, of course, the State Department of the United States.
It is quite rare for, of course, the PLA to test launch a ballistic missile in the Pacific Ocean. Walk us through you talked about the proximity to U.S. bases, and, the Australian Prime Minister is around that region as well. Just talk us through just the significance of this.
Well, it is significant. Obviously, the United States has had great presence there since World War II in all the South Pacific, including the Solomon Islands. But in 2022, the Solomon Islands struck a security arrangement with Beijing. The Wang Yi, the foreign minister, had visited a number of different South Pacific island nations, including the Solomon Islands, having this security arrangement. But there's a new prime minister in the Solomon Islands, Matthew Wale. He is now reviewing that agreement with Beijing because it apparently lacks some transparency. And as I mentioned, Albanese is in the Solomon Islands right now. They are said to be negotiating a new comprehensive pact between Canberra and the Solomon Islands. This after Australia just on Monday, I believe, signed one with Fiji, and also, a few weeks after signing a similar deal with Vanuatu. So again, strategically important, obviously, key shipping lanes throughout the South Pacific. So I don't want to say this was a coincidence that they test fired this over a long range over those strategic islands, but it was also sort of sending a message as well.
All right, as NATO is underway there as well, that meeting in Turkey. Stephen, thank you. Our Chief North Asia Correspondent, Stephen Ingo there. We're checking when it comes to some movers that we're focusing on here. Hanwha Ocean, this one is plunging as much as 20% earlier, 23% losses here right now. This is after what we learned about them losing this submarine deal from Canada, and they actually ended up going with a German bid. So there you go. The stock not doing quite well in face of that here. So certainly one thing to watch there when it comes to Hanwha. But yes, as this is also in focus for South Korea as they look into expanding its defense industry partnerships with NATO countries. Take a look when it comes to some of these airline stocks in particular as well. So Morgan Stanley came out with a call here, cutting the ratings of some of these A-listed shares to equal weight, citing weaker domestic traffic and softer passenger yields. So you are seeing all of them fall here this morning. This is Bloomberg. 11:29 a.m. in Tokyo. Japanese markets are going on break in just a moment, and we're still on dollar-yen watch, right? 161. Well, you can say close to 162 levels once again for the currency, and certainly there's a lot of talk about the short positioning around that. I think is the highest that we've seen since 2007. So there is still continued, conviction to trade up dollar-yen in the meantime, given we haven't seen any sort of intervention, sort of moves from the government just of yet. We are seeing the equity wobbles there in the Nikkei. We're down about 1.3%. Some of the chips are certainly seeing a bit of pressure here after those Samsung earnings, despite being pretty solid here when you talk about that 19-fold surge in operating profit. But yes, still not enough to impress the equity traders out there here today. We're checking the rest of Asia. We are lower by about 0.8% on the regional benchmark. U.S. futures are also in the red. The dollar at least is flat. But you are seeing, a bit of red here, mostly by the tech space, right? We're lower by about more than 2% on the Asia Pacific Infotech gauge. So certainly still a lot of questions about, the memory rally and where we go from here. Look at Samsung. We're down some 8% here right now. Quite a bit of consolidation when it comes to the Korea chip maker names. But again, SK Hynix, though it is falling also in sympathy, 7% here. We do have that ADR listing in the U.S. coming up at the end of the week. Perhaps that could be the next catalyst here. And earlier we did speak with Michael Liang, Chief Investment Officer at Foundation Asset Management Hong Kong, and he talked about really this AI inflection, right? He gave it a timeline of 3 to 6 months. Here's him talking through some of the timing.
If you look at the Samsung results, the great results, but look at the net margins, Hynix and Micron alike, their gross net margin is over 60%. If you look at LV or even Apple, their net margin is around 20. This is 3 times of a consumer name. It's just not normal. That will create a lot of imbalances within the AI ecosystem.
All right, our next guest expects equities to move higher over the next 12 months, primarily driven by strong earnings growth. Let's bring in Adrian Zuercher, co-head of Global Asset Allocation and APAC Investment Management at UBS Chief Investment Office. Certainly there's a lot of questions around the durability of this AI rally here. What's your view on how things are going to play out for the rest of the year now?
Well, I mean, the AI rally, at least year to date, was very, very concentrated in itself as well. It's mostly on the semiconductor side, and it looks in some area a bit too extended, but we see also earnings growth coming through. So the earnings season will be very, very crucial that part of the AI trade will continue. We still remain positive, but as we can see, the market will start to read between the lines and really wants to see the growth momentum coming through. But we actually take a bit of a broader look. I think AI itself, some part actually looks relatively attractive. PE have come off because they're actually delivering earnings, but they haven't gone up that much. There was all the fear about software, which starts to flash a little bit more green on our screens as well. But overall, we actually think we see a broadening of the earnings growth, a broadening of these economic trends that we actually see, and that sort of should lift the overall market, and that's why we stay positive for the second half.
I mean, just the news of Meta last week talking about they're looking to rent out excess computing. I think that sends some warning signs to the market. Is there concerns of overspending among some of these hyperscalers now? Do you share those concerns?
Well, there will be, and there is probably overspending in some areas. I think we have for this year, penciled in around 690 billion of CapEx from the hyperscaler. Next year, very close to 1 trillion. That might come through. And the history tells us that in every of these expansion, you have overinvestment. The question is who's the winner and who will lose it. Some of these investments will be basically on the negative side. Some will win, some not. But I think it's too early at this point. Everybody's still ramping up capacity. Demand is increasing, tokenization is increasing, and that trend will continue for the next couple of years in our view.
How do you position around that now? Is it if memory still seems to be a bit volatile, are you looking to get a bit more, I guess, granular in the whole supply chain?
Particularly, we also try to expand that as well. So the enablers on one hand, but then also who actually benefits out of that, who gets economic of scale, who's able to monetize some of that part. That's what we're definitely looking at. And so we have this rotation within the AI trade itself that we start to look into, and you have to be granular on the selection, of course.
Yeah, I want to kind of zoom out a little bit on just what we saw in the end of the first half. Is that you're seeing vol that's back to levels before the war. Commodity markets obviously are coming off now, given that it is the end of this Iran war in some ways. Spreads are still pretty tight. I mean, how do you look at where we are in terms of where markets and sentiment is right now? Do you feel like there's a bit of complacency, just given that global rates are still going up everywhere?
Well, I mean, it's quite amazing where we stand. I mean, a good multi-asset class portfolio balance is up 6, 7, 8%, despite what we have seen in the Middle East, oil price disruption, whatever goes on. But then you take a step back and you look at economic growth remains very, very supported. We actually don't see any sort of slowdown. It's not just CapEx. We see consumer spending is coming through. So the economy itself actually looks relatively healthy. And then you look at interest rates. Yes, we priced in higher interest rates, but in our view, a lot is in the price and probably too much. So some of the central banks might still increase, like the ECB, one time. But eventually, we don't think the Fed is actually able to hike interest rates, so they stay put, and eventually they actually will have to or can cut interest rates. And that all should remain very supportive. Earnings growth is here. So overall, it's justified. And yes, valuation is not cheap anymore, and that's probably the risk that we had a very concentrated rally. So if some of the hyperscaler or in the EM space, Korea and Taiwan are not delivering exactly, that might create volatility. But overall, we have seen healthcare stocks over the last couple of weeks actually rebounding very, very strongly. It's a sector we actually also like, for example.
Does that mean that I can expect the dollar strength to kind of fade from here, especially when it comes to, if you're thinking that the Fed might not be able to hike this year? Can global rates also come off too, along with the dollar?
So overall, we have built in a long duration stance in our portfolio, and we actually really diversified. So we have US, we're basically in Italy, so the whole European complex, and we also are long basically on the Australian side. On the dollar side, look, the structural headwinds for the dollar remain. There's a debasement going on. The fiscal situation looks not great. Current account deficit doesn't look great. But short term, yes, I think there's probably too much negativity priced in on the rate side. And we also see that other central banks are probably can't deliver as much as priced in. So it's a bit more range bound. It will create volatility for the next 6 to 9 months. Afterwards, we probably will resume some of the downtrend on the dollar, but it's a gradual downtrend, and dollar at any time can rebound 4 or 5%, given it still remains the most important currency, and there's a lot of still carry trade to maybe be unwind on the Japanese yen. So there's a few things that count for the dollar in the short term.
Okay, we covered sort of FX, equities, bonds a bit. It's interesting you're saying you're broadening your commodity exposure. How to do so? Is it still within the energy space, or what are you looking at? I mean, gold seems to be still question marks around what's going to happen there. Yeah, so it's very tactically, we actually sold our gold position. It was one of our most successful tactical trade. I know it's actually not even tactical. We had it almost on for 2 years. We still see upside on gold, but some of the key drivers are probably more challenged in the short term, and there's a lot of money went in, and it has to digest a little bit. But commodity overall, I think at this point looks quite interesting, particularly the metal side, industrial metal. We actually think that the economic sort of environment looks very, very strong. China has been a bit weak, but we also expect recovery there. ISM above 50 again since a long time. So it counts that manufacturing should come back, and that should help metals. And I think it's a good diversifier in the current environment where we still have inflation pressure, and commodities a very good hedge against inflation, not just gold, overall commodities. And therefore, it definitely makes sense to have a look at the commodity in a multi-asset class portfolio. How do you look at China now for the second half? You say there's a recovery. And what's the best way to express that? Well, look, China remains challenged still, and we see the economic momentum is weak, but marginally things might improve, and that should basically help. It's a very cheap market still. The AI part looks cheap and has really sold off over the last couple of months. So that gives opportunities, but it's also broadening basically that we do expect that earnings can come through. The local market has been better than the offshore market. We still like the onshore market as well. But you really want to approach China in a bigger context at this point. But it's mainly a valuation call. And then you get marginal improvement, and that should basically unlock some of the cheaper valuations that we see. Adrian, always good to have you. Adrian Zuercher there, co-head of Global Asset Allocation and co-head of Global Investment Management for APAC at UBS Chief Investment Office. We're watching the Kospi here, the intraday moves that we've seen, and we're just around those session lows right now. Close to 6% losses for the Kospi here. Samsung certainly is the big drag along with SK Hynix. We're coming off, though, some of the initial lows for Samsung, but still we're talking about 7% drops for Samsung as well as SK Hynix here today. In the meantime, let's cross back to what we're seeing in the Hong Kong FIC and Bond Connect Summit, where there is a panel when it comes to transforming Hong Kong's FIC market is underway. According to the panelists here, we're talking to Julia Liang, the CEO of the SFC, and Bonnie Chan, the Chief Executive for the Hong Kong Exchange, and Daryl Chan, the Deputy Chief Executive for HKMA.
In Shanghai and Hong Kong, those two cities, we witnessed the launching of the bond scheme, connection scheme. That scheme played as a crucial part of the financial instruments in settlement clearing, depository management, and arrangement.
All right, we are checking some of these chips in China here this morning. Apart from Hua Hong Semi, which seems to be recovering, we're up 4%. The rest of the chip space seems to be under pressure here after those Samsung earnings. But quite interesting enough, there's been a Bloomberg Intelligence survey out there that is talking about what Chinese companies are doing and are preparing, and they are looking to spend more on locally made AI chips, a move that could potentially erode NVIDIA's dominance in the industry. Bloomberg's latest China CIO survey shows executives plan to really allocate 46% of their AI accelerator budgets to domestic chips over the next 12 months. So that's compared to about 30% currently. The author of this report, our senior analyst, Yvonne, joins us now. It's interesting numbers here because obviously we have seen some tighter restrictions from the U.S. side of things when it comes to these, Chinese AI players and the like. But you're still seeing a massive amount of expansion going on. What are you feeling on the ground there, and what are you hearing from this survey?
Okay, obviously, people will thought that the U.S. pressure might actually cripple China's capability to churn out more AI chips or AI capability. But what we've seen on the ground, it is based on the surveys that pretty much all the enterprise CIO are talking about expansion, and actually over 80% of the respondents saying they are over budget this year, and largely driven by AI, not surprisingly. So we see a very massive expansion going on in China.
Given where the regulatory side and the geopolitics, do you think chip makers in China, they can actually scale up to supply the amount of silicon needed to meet demand?
Okay, I think the typical narrative is always that, because of restriction of lithography equipment, China won't be able to make the top-end or cutting-edge chip, which is partially true. But at the moment, I think SMIC, with their 7-nanometer capability, they can actually churn out a decent amount of AI chips. So surprisingly, the AI compute is not really the bottleneck at the moment for AI development. The real bottleneck, based on our survey, is actually on the memory side, particularly the high bandwidth memory. At the moment, I think there's only one domestic player in China can make it, CXMT.
Yeah.
And even though they are expanding capacity aggressively, they're still unable to meet the domestic demand. And then the other bottleneck is actually about the advanced packaging capability, which is part of the approach that China can make up to narrow the gap of the advanced chip, which is why the advanced packaging has also become very tight in China.
What do you see as what domestic tech companies in China are doing right now to, in terms of grabbing local market share?
Yes.
And potentially displacing NVIDIA?
Yes, like you mentioned earlier, right? One of the surveys that a lot of enterprises are putting more money for local-made AI accelerator. Also, I think on the server side, we see pretty much all the local brands, Huawei, Sugong, Lenovo, are basically dominating all the server market. So what happens is that these companies are thriving on this local demand. And then on the AI accelerator side, Huawei is definitely the dominant player there, even though NVIDIA as a legacy chip is still the sort of mainstream deployed. But then going forward, we'll see the local chips are definitely getting market share over time.
And I think and when you look at this whole global AI arm race, you wonder who's winning, right? Who's leading? Is it U.S.? Is it China? It's kind of different how you kind of look at it, right? How do you think they differ in terms of their expansion approach? And what does it tell you about this hardware split? What does it mean longer term in terms of global competition?
I think we also do the similar survey in the U.S. For years, actually, so we can do some sort of comparison. I think there's a lot of difference, actually, but I only like to highlight maybe two of them. I think one of them is about that the U.S. firm, they are allowed to get the best they can get, right? Like GPU, they go for the best.
Yes.
But for China, obviously, they don't have this luxury. So what they do is they're going for system optimization, meaning that they are focusing on pretty much all the elements of the system. So in terms of AI spending priority in the US, you may see, people consider GPU to be the top priority in their spending. But in China, interestingly, they spread out. You see, like GPU is important, CPU is important, memory is important. So pretty much everything is important because they are going for best system performance. So I think that's a very important difference between China and the US.
Stephen, it was a fantastic survey there. Thank you so much for bringing it to us. to the China show. Our Bloomberg Intelligence senior industry analyst, Stephen Zheng there. A look at Asian markets and how they're doing as we head into that break. And certainly you're seeing when it comes to Greater China, we are largely speaking moderately lower, but relatively speaking doing better than the likes of Kospi, for example. Here, Kospi now at the session lows down more than 6%. This is Bloomberg. All right, to your FIFA World Cup update here right now. Now, basically all co-hosts are basically out of this tournament here as they get closer to those quarterfinals. After that 4-1 defeat to Belgium in Seattle, U.S. is out. That match, of course, was overshadowed by President Trump's controversial intervention, requesting a review of the red card given to star U.S. striker Folarin Balogun. Now, in the previous game, that should have seen him suspended from this Belgian clash. But that was overturned, despite Belgium appealing the decision, which they called astonishing. Let's bring in our deputy managing editor, Balazs Benz now, who's been tracking everything, not just the game and the match, but also the politics behind all of this here right now. But as we were talking about in the break, I mean, it was a stunning sort of win for Belgium, but I don't think this is how people are going to remember this match too much here. It's really about the politics.
Yeah, and it's probably not how Belgians want to remember it. This is a big win for them. They're through to the quarterfinals. It was a pretty easy win for them. The U.S. team looked kind of lethargic, and you have to think that everything surrounding the game must have weighed on the players a little bit. And like you said, what everybody's going to remember about this game is the overturned red card. It's sort of unprecedented move by the U.S. president to interfere, to talk to the FIFA leaders and kind of get that red card overturned and Balogun reinstated. That's what everybody's going to talk about. And we will be talking about the implications and the consequences for a long time to come, I think.
Yeah, the backlash we're still kind of tracking here this morning, right? The likes of UEFA saying that, FIFA did cross a red line. Walk us through, I mean, FIFA has had, I guess you could say scandals before of corruption. What is going to be the future of this institution going to look like now, given, there was a lot of questions around the relationship that FIFA, the president, did have with President Trump?
Yeah, and I think that's the last question that Gianni Infantino wanted to discuss around this World Cup. He came in as president of FIFA promising to clean up corruption left by his predecessor, Sepp Blatter, who had a lot of controversy. Blatter was one of the people who called out this decision and saying that this crossed the line, this went overboard. And we have a lot of voices around the world of football, from Jurgen Klopp, the legendary coach, to other people, other football leaders around the world, saying that this has gone too far. And as you said, even UEFA, one of the member organizations of FIFA, has said this is too much. And Infantino right now is facing some calls for his resignation. So during a World Cup, which is supposed to be a celebration of the sport, a crowning achievement for any FIFA leader, to be shrouded in that sort of controversy, that is not the look he wanted.
I'm wondering, what are the repercussions, right? If FIFA itself is the governing body of the sport, I mean, are there ways to kind of explore, I don't know, any sort of indiscretion? I mean, is there a governing body above FIFA that can look at this issue further?
I think it's going to have to come down to FIFA itself. Okay. FIFA members and, all the delegates there. There will be meetings after the World Cup where they will have to evaluate the way the World Cup went and the way the organizers have done. And I'm sure there will be a lot of questions to Infantino about what he thinks went down and how he wants to go forward.
Yeah.
I wouldn't be surprised if those calls for his resignation would get a bit louder after this.
How's your bracket looking, by the way?
Don't ask.
All right. Who could still win, you think? I don't know.
I know my friend Manu is watching, so I'm going to say Spain.
Okay. Manuel, if you're listening, you got a supporter there. All right. Of course, Cristiano Ronaldo as well, losing his sort of chance for Portugal to win the World Cup. So certainly there is all that going on when it comes to FIFA. Thanks to Balazs there giving us that update. Our Asia Equities Deputy Managing Editor today, though, sports commentator. In other world news this morning, Chinese state media says floods triggered by Typhoon Maysak have forced around 48,000 people from their homes in the southern Guangxi province. 2 people were reportedly killed. The National Meteorological Center expects heavy rain to continue until Wednesday across parts of southern central and eastern China. A Chinese court has handed down a rare death sentence to a former official on corruption charges. State broadcaster CCTV says Yang Yulin, a former vice director of an economic zone in the eastern city of Nanjing, was sentenced to death for taking bribes worth more than $325 million between 2013 and 2023. The severe punishment underscores the intensity of President Xi Jinping's anti-graft crackdown. All right, taking a look when it comes to markets here, FX and the like. So we are seeing the dollar come off slightly here. There is some strength crossing here when it comes to Asian currencies in particular. We're watching, of course, Philippines. There's some inflation numbers coming through from Southeast Asia. Philippines is certainly one. BSP has talked about here when it comes to prepare to take action if inflation pressures perk up again. Those numbers came in at 6.4%, which is largely around estimates there. But Tencent Kuaishou, this is an interesting one. Tencent selling its stake in Kuaishou. We are seeing here Kuaishou shares falling some 8% in that city, saying a bit of an unusual move from Tencent on that part. We have more from Insight coming up. This is Bloomberg.